Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Markets are fractionally lower this morning as investors continue to monitor the latest developments in the Middle East. The major averages are coming off a winning session after President Donald Trump said the U.S. and Iran were engaged in productive conversations. However, Iran later said that no direct negotiations took place. As of 8 a.m. Eastern, the price of ICE Brent crude oil is trading at $103 a barrel. And here's what else is on tap this hour. NYSE-listed Klaviyo has just unveiled a new solution that it says will be capable of generating full marketing campaigns from a single prompt. Its co-CEO, Andrew Bielecki, will tell me how this latest AI solution works. Meanwhile, NYSE-listed pharmaceutical giant Pfizer has achieved several oncology-related milestones. In just the past month, its CFO, Dave Denton, will join me here in studio to explain how these achievements are fitting into the company's growth strategy. And at 9:30 Eastern, Banco Macro will ring the opening bell to celebrate 20 years as an NYSE-listed company. And today's bell ringer CEO, Juan Parma, will join me from the trading floor to break down how its products are meeting the demands of customers in Argentina. But we begin with the markets, as we often do here on NYSE Live. Joining me now is Kevin Mon. He is the president and CIO at Hennion and Walsh. Kevin, welcome to the New York Stock Exchange.
Oh, thank you, Ashley. It's great to be here.
So great to have you. So we're seeing futures pull back a little, coming off of a winning session. Investors hopeful that there might be an end to the Middle East conflict. What do you anticipate in today's session?
I think there's going to be more choppiness today and for the balance of this week until we learn at the end of this 5-day reprieve if, in fact, there is any resolution to the Iran conflict. But I do think yesterday should serve as a reminder, Ashley, to all investors of the dangers in trying to time the market, because one social media post or one announcement can really significantly move markets. And if you're on the sidelines, you could miss out on a significant upward move or downward move. So stay true to your risk tolerance, build diversification into your portfolio, and recognize during this conflict and at the end of the conflict, all those underlying themes that were resonating in the markets last year and this year will likely continue to resonate.
When you say time the markets,
Yes.
What do you mean by that in plain language?
Sure. So a lot of investors, when they see periods of volatility like this, they abandon their long-term investment plan, they abandon their risk tolerance level, and they flee to the sidelines, i.e. they go to cash. And there's a risk in doing so. We did the research at Hennion and Walsh, and what we found is that over a 20-year period, ending at the beginning of this year, the 7 of the 10 best days in the market took place within 2 weeks of the 10 worst days. Now, I wish I knew when those 10 worst days were going to be, but I don't have a crystal ball. There's no crystal ball here on the floor of the New York Stock Exchange. But I can assure you, if you're not in the market on 7 of those 10 best days, you'll likely miss out on the most significant returns the market has to offer.
And I understand we may be seeing the pullback in relation to oil prices.
Yes.
ICE Brent crude was under $100 a barrel, over $100 a barrel. Today it's at 103 currently. Why are markets so reactive to the price of oil?
Sure, because the price of oil has a direct impact on inflation. Inflation has a direct impact on consumer spending behavior. And 70% of our economic growth comes from consumer spending. So the less consumers have to spend or more worried they are about how much it costs to fill up their tank, the more they're going to keep money in their pocket, and that slows down the economy. The Fed is aware of that, and that's why they raised their forecast for core PCE to 2.7% by the end of this year. Not dramatically high, but higher than their earlier forecasts.
Well, of course, speaking of inflation,
Yes.
The Fed did meet last week, and they decided to hold rates steady. What do you foresee for the rest of 2026?
I don't think the investors should be looking to the Fed for too many answers this year. They maintain their forecast for one rate cut of 25 basis points this year and one rate cut of 25 basis points next year. Some are even forecasting that they may consider hiking interest rates. That's not our base case, but I wouldn't be surprised to see no rate cuts at all this year. But just as dramatically as oil prices rose, they could fall as well. And I think by the end of this year, if in fact unemployment does start to move higher, then you may see the Fed step in with their one forecasted rate cut, but no more.
If we did see a rate hike, how does that directly impact investors?
It changes the whole calculus for what could happen going down the road. Investors were forecasting at least one rate cut, which would benefit smaller cap stocks, companies seeking financing, and potential growth potential in the market. But regardless of what the Federal Reserve does, Ashley, I still go back to those themes that are working the market. AI infrastructure spending, defense stocks, power solutions, utility companies. Those investment solutions continue to work and will likely continue to work regardless of what the Federal Reserve does or doesn't do.
And the national price of regular gas is $3.98 a gallon. That's according to AAA. How do you think rising oil prices might impact inflation?
A direct impact, clearly. We didn't see it in the most recent inflation reports, but we'll likely see it in the upcoming inflation reports. But the Fed knew that. And so when they updated their forecast for inflation, for economic growth and unemployment, and their outlook for interest rates last week, they factored in where they thought inflation might go to. But of course, that could change the longer this conflict lasts.
All right, and when it comes to the Fed's dual mandate, what challenges does the Fed face if inflation ticks higher while the job market slows?
They're really cut between a rock and a hard place there. Fortunately, last week they did maintain their outlook for unemployment at 4.4%. They actually increased their outlook for GDP growth this year to 2.4% while still raising their forecast for inflation. They can't solve both sides of the mandate. If unemployment weakens, you would think they'd want to cut interest rates. If inflation stays high, you would think they'd want to raise interest rates. They can't accomplish both. So they're likely going to sit on their hands for the foreseeable future.
Yeah, you said the investors shouldn't expect too much from the Fed this year.
Not.
Where should they be focusing instead?
Yeah, I think they should be looking to other areas of the market where money continues to be spent. Follow the money, if you will, Ashley. We continue to hear announcements about technology companies spending more on AI infrastructure. So you're going to look for the construction companies, the cooling companies, the memory companies, and of course the power-oriented solutions. And the other side of this military conflict is the need for more munitions, upgrading and modernizing defense capabilities across the world. So look to the industrial sectors and defense companies that would benefit from that.
And speaking of AI, you say that AI is, quote, still in batting practice.
It really is.
What does that mean? What does that mean for investors?
Yeah, so I believe batting practice entails all the massive AI infrastructure spend. And according to NVIDIA's CEO, Jensen Huang, he believes there's going to be 3 to 4 trillion spent on AI infrastructure by the end of this decade. That's the batting practice. Once we move beyond the infrastructure spend, then we'll start playing the games, a double header of games where we're going to see the practical implications of AI and hopefully the return on investment of all this spending. You have to be patient for that investment opportunities. If you want today's investment opportunities, lean into the infrastructure plays.
Where are the most attractive areas of infrastructure, in your opinion?
Yeah, so I believe the AI revolution comes to a screeching halt without power and memory. Memory, I think of companies like Micron. Obviously, they blew out their revenue and earnings last week and guided higher. I think about data construction companies. How about a company that's out there like Eaton Corporation? How about cooling companies such as Vertiv or Amodian Manufacturing? And then, of course, go beyond that into the largest dedicated chip foundry in the world. That would be Taiwan Semiconductor. I think those are opportunities, but don't forget about those defense stocks because they're critical and they're receiving a lot of inflow money.
All right. Kevin Mon, President and CEO at Hennion & Walsh, thank you for joining us at the New York Stock Exchange.
It's always a pleasure.
Coming up, taxpayers are navigating a new landscape with complex rules and the growing role of AI in the process. Curtis Campbell, he is the CEO of NYSE listed H&R Block. He took us through how he is helping clients next.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself, it's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry.
To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Tax day is just over 3 weeks away, and experts say this tax season is one of the most complex yet due to the One Big Beautiful Bill Act. Curtis Campbell, he's the CEO of NYSE-listed H&R Block. He recently joined us on NYSE Live and explained what makes these changes significant and challenging for taxpayers when filing. Take a listen.
This year marks a year of massive change when it comes to tax law. It's really important for consumers this year, because of so much change, to turn to a tax professional to guide them through the change. In many cases, it could impact customers up to 10% of an increase in their tax return. So it's a pretty important year.
All right, and you say that tax changes create complexity, but also opportunity. How do you balance helping clients navigate the rules while ensuring that they maximize their refunds?
Ashley, this tax season brings some of the most complex and significant tax changes we've seen in several years. And many taxpayers are unsure of how these rules affect their bottom line. Here at Block, our opportunity is to turn that uncertainty into confidence. And we do that by combining human expertise with technology. Here at Block, our tax pros average 10 years of experience with us, and they're up to speed on every change. And our digital tools also help them identify credits, deductions, and planning opportunities that, in many cases, a lot of people would have otherwise missed. Ashley, here at Block, we also offer this unique service called Second Look, where we have the opportunity to review the last 3 years of a new client's prior tax returns, and we do that completely free, often finding money others may have missed. And for many clients, that's real money in their pockets. And at Block, we're committed to ensure that every one of our clients gets every dollar they deserve. Our services here at Block, they also offer clients the accuracy they need, the maximum refund that they're entitled to, and the peace of mind that comes from knowing that it was done right at the end of the day.
And what is the H&R Block experience like when you're filing taxes, whether it's online or in person?
Yeah, so we've got a couple different options. Our focus is to meet clients where they are, whether they choose to connect with us online with our DIY product, or go into one of our tax offices and connect with a pro. As we look at this season, we see incredible opportunity to provide clarity and confidence, and we're here to improve our clients' financial outcomes, no matter where they come from, what their backgrounds are, and we want to ensure that they get every dollar they deserve. As we think about the new tax changes this year, these tax changes can translate into really, really meaningful savings. And I'll give you a couple of examples, Ashley. A nurse that earns, let's say, $60,000, who may have earned $10,000 in overtime, could save almost $1,300 in their taxes this year. A server, for example, earning $42,000 with $15,000 in tips, they could see a savings of almost $2,000. And those are real savings for working families, and we're super excited to help clients take full advantage of these new rules.
And how is AI impacting the tax preparation experience for this season and beyond?
Ashley, AI is an incredible enabler for our business. It allows us to deliver better experiences for our clients and for our taxpayers. AI is also embedded in many of our key features this season, including AI Tax Assist, Second Look, and our new AI-enabled tax pro assistant. Over the years, over 55% of the U.S. population, they turn to tax pros seeking confidence, trust, and judgment. And our integration of AI capabilities allows us to deliver best-in-class experiences for the millions of people who select us every year.
So what are some of those use cases for the AI? What is the, how is the AI, enhancing the process?
So for clients who choose our DIY product, who run into fear, uncertainty, and doubt somewhere in the experience, they've got the ability to connect through our AI agent to ask specific questions, to gain more confidence as they go through the product by themselves. If they're engaging with our tax pros, we've also built in AI tools via agents that allow our tax pros to provide specific guidance to each one of their individual clients.
All right, and I understand H&R Block was recently named the best online tax service for 2026 by CNET. Can you share more about that honor?
We are super proud of this recognition, Ashley. So CNET named H&R Block as their best overall online tax service for 2026. And this recognition reflects our commitment to blending digital innovation with human expertise, and it validates our work to help clients get every dollar they deserve. To enable that capability, this year we've delivered several major enhancements that give us an unmatched competitive edge. So number one would be our transparent pricing that's easy to understand. Number two would be our user-friendly experience that makes filing super straightforward. Third would be our innovative AI tax assistant that I talked about, which helps clients navigate deductions and credits with confidence. And lastly, it's easy access to our tax pros through our Ask a Pro feature. And Ashley, I'd be remiss if I didn't recognize the amazing team that we have here at Block who wake up every day focused on solving for our clients. And, I believe these awards motivate us to keep raising the bar, listening to our clients and delivering the expert guidance and support they deserve.
And Curtis, what is the most direct way for someone to file their taxes using H&R Block? How can they find out more?
Well, the easiest way is for clients to visit hrblock.com. And once again, that's hrblock.com. And their clients can choose to work with a tax pro or file taxes on their own with our award-winning DIY software.
Thank you, H&R Block CEO Curtis Campbell. Coming up, NYSE-listed Klaviyo has just unveiled its latest AI solution, and it can be completed with a single AI prompt. We're going to have that story next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this morning, NYSE-listed Klaviyo unveiled its latest solution called Composer. Klaviyo says that this AI offering generates, optimizes, and recommends full marketing campaigns, all from a single prompt. Joining me now to talk more about it is Andrew Bielecki. He is Klaviyo's co-founder and co-CEO. Andrew, welcome to NYSE Live.
Yeah, thanks for having us. Really excited to talk about Composer today.
Yeah, can you take us through how Composer works?
Yeah, sure. So at Klaviyo, we help more than 200,000 businesses around the world, everywhere from nights and weekend startups to big iconic brands like Mattel, Away Travel, Glossier. And we really believe in the future of autonomous software. And what Composer does, it's our next generation marketing agent, and it really does 2 things for any size business or brand. The first is you can go from a prompt, so we're all pretty used to typing into the ChatGPT box, but you can also pass it maybe a Word doc or Google doc you have, or even a team internal chat you have, or I've even given it pictures of my notebook and sketches, and it will turn it into a full marketing campaign. So we're really excited about that because we think it's going to take away a lot of the kind of pointing and clicking and designing of marketing. And the other nice part is it stays on brand automatically. It looks at your website, past marketing campaigns, and figures out your style. And the second part is we've talked to a lot of marketers and they say, okay, well, that's great, you've sped me up, but I also need some help on what to do. So we've embedded inside of Composer the ability to do research. And it will do research both on that business and brands, kind of past campaigns, what's worked well. It knows all about, say, their product, services, and inventory levels. And then it can also look across the Klaviyo universe, and the billions of data points that we get every day about what consumers are engaging with, what kinds of content, what kinds of promotions are running out there in the world. And you can imagine now you've got this always on, really smart AI assistant that's there to help make your marketing awesome.
I know this just launched, but have people been using it and have you received any feedback on it yet?
Yeah, lots of feedback, very positive. I mean, both the time savings and the thinking. I'll give you a small example. So obviously it's springtime here in the US. I actually just signed up one of our kids for Little League. So imagine you're a sporting goods store and you have this idea that spring sports, let's say for kids, start at different times of year across the country. So in the South, it's a little earlier. In the North, it's a little bit later. Every marketer we've talked to says, yeah, I'd love to do something that's based on where consumers live and maybe the sports that are popular there. But just, kind of operationally, it's a lot of work to set up all of those campaigns because you really want to treat maybe each of the different regions or states, uniquely. But now with Composer, you can describe that. It will go out and do the research for you to help you figure out, which sports are popular and at what times of year. And it can literally plan a multi-month marketing campaign. And then what we're seeing from folks is when they're leveraging our marketing AI, they're getting way better results. And it's not a little bit better. We've had examples of Adelson's skincare brand. We're using our marketing agent. This was our previous generation marketing agent. It'll be even better now with Composer. They were already seeing 40% better engagement. So not just more opens and clicks, but literally more consumers converting into transactions. We think these are the kinds of gains you're going to see with AI. That all of a sudden you have this super smart, kind of PhD level marketer on your team, and it's going to help you, maybe get to work you couldn't get to, and also help you make really smart decisions.
And why was now the right time to introduce Composer?
Well, we've been following along with a lot of the AI models, and frankly, they've gotten to the point where the intelligence they have, their ability to follow instructions has gotten so good that we now think that for marketers, for small businesses, for larger enterprises, more of the work of planning and then actually executing marketing campaigns can be taken off people's plate. So marketers can be more creative. They can drive the brand direction, the strategy, what products they want to bring to the world. So because of these advancements in models and frankly our team's ability to harness that intelligence, what we're finding is you can give AI agents the ability to think for a long time and reason about marketing, and the results are just awesome. We do these, we show this to users and we get hands-on with them. And not only do they love the creative and the design, but then they love the results. And what we're finding is increasingly, rather than go in and maybe point and click by themselves, our customers, our users are preferring to start with AI to draft things. And then from there, they can make last minute, last little tweaks and edits. And it's speeding them up and it's getting them much better results.
And how is Composer different from other AI solutions, similar AI solutions on the market?
Yeah, well, one of the things we've noticed is there's a lot of these general purpose AI assistants or AI agents. And we believe that if you think about different jobs, different types of work, what you want is you want that expert. So in our case, what makes our marketing agent different is not just the fact that it's very good in terms of interpreting the prompts and the context that you give it, but also because we've embedded into it this intelligence stream that uses the billions of data points that Klaviyo gets every day to help you understand not only your consumers, but all consumers, and maybe, again, what kinds of content, what kinds of incentives, what kind of creatives they like. So you can imagine, what if you on your marketing team, you had somebody who was just sitting around the table with you, and for every idea you had, it would make sure it's on brand, but it would also say, hey, across the billions of people who have interacted with any kind of messaging or marketing or other customer experience today, here are the trends we're seeing, and then would make adjustments to your marketing in real time. So we very much believe that AI agents in the future, they're going to have this kind of data feed of what works, what doesn't. And because consumer behavior changes, if not day to day, certainly week to week and month to month, you're going to want that intelligence baked into these AI agents. And that's what we're finding. There's a lot of gains from that.
What's next for Klaviyo?
Well, we very much, Klaviyo is we say the B2C CRM. We want to be the place that consumer businesses use to store and understand everything about their customers, deliver stunning experiences. We think the future of that is increasingly going to be, how do you deliver stunning experiences through autonomous agents, through agents that can think and work on your behalf. So we're excited today to talk about Composer, our next gen marketing agent. We also have some big updates to Customer Agent, which is our always on, digital representative for your business. So we're excited to keep working on those, and we can't wait to see what people build with them.
All right, thank you, Andrew Bielecki, Klaviyo's co-founder and co-CEO, for joining us on NYSE Live.
Thanks.
Coming up, NYSE-listed Banco Macro will ring the opening bell to celebrate a company milestone. Don't go anywhere.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, NYSE-listed Banco Macro will ring the opening bell to kick off today's session and celebrate a milestone moment. The firm, based in Buenos Aires, Argentina, is here to celebrate its 20th anniversary of listing. Let's go to the bell. You just saw Banco Macro Chair Jorge Brito and CEO Juan Parma. Our bell ringers ring the opening bell to celebrate that milestone. I will be speaking with the CEO later in the show, and the stock market is a officially open for trade. Markets are fractionally lower as investors continue to monitor the latest developments in the Middle East. The major averages are coming off a winning session after President Donald Trump said the U.S. and Iran were engaged in, quote, productive conversations. However, Iran later said that no direct negotiations took place. And currently, the price of Brent crude oil is trading just under $103 a barrel. Well, NYSE-listed pharmaceutical giant Pfizer is making some significant moves in the oncology space, and we're not just talking about its $43 billion acquisition of Seagen in late 2023. A slew of recent milestones are bolstering the company's growth strategy. Joining me now is Pfizer's CFO, Dave Denton. Dave, welcome to the New York Stock Exchange.
Thank you. It's always great to be here. Thank you for hosting me today.
All right, so your team has had a number of breakthroughs in the oncology space, including in PADCEV for bladder cancer. Can you share why that's so important?
Yeah, well, first and foremost, Pfizer's really on a journey to reinvent itself coming off the COVID franchise. And what we've done is really invested heavily within the oncology space as one of the core anchors of our business. Cancer affects 1 in 6 people in the U.S. and globally, so it's a huge franchise and a large unmet need. And with the Seagen acquisition, we're really leaning into the oncology space to give really needed therapies for patients around the world.
Can you talk a little bit more about PADCEV?
Yeah, well, PADCEV is obviously in bladder cancer. We're doing it both on a monotherapy and also in combination with other therapies. It's a way in which we can really approach treatment for this really complex, complicated disease for patients. And this is really going to unlock quality of life for both patients, but also the families in which they are a part of.
How is the acquisition of Seagen paying off so far? $43 billion.
Yeah, certainly was a really big investment on our behalf. We're now a couple years into it. Seagen had 4 online marketed products, and those products continue to do extremely well within the commercial space. It had a pipeline of about 19 or 20 assets as well that we're developing into medicines ultimately. Is actually going really well. According to our plans, when we first did the acquisition, we're a little bit ahead of our financial projections, so that's great news as the CFO. At the same time, we're advancing this very robust pipeline, not just the Seagen assets that we acquired, but we're also complementing them with a large pipeline of products that we had within our oncology franchise and legacy Pfizer.
Do you ever get patient feedback?
We do. We actually, one of our big mantras is to really engage both with patients and with healthcare professionals. And you can't imagine the response that we get from patients when we're giving them a medicine that can actually improve their quality of life and extend their life in these rare diseases from an oncology perspective.
And you also have a few other additional oncology-related achievements associated with prostate and breast cancer. Can you share more about those?
Correct. I think one of the biggest ones that we're excited about is really in breast cancer. We have a product that now is going to read out either late this year and early into next year that we think will really advance the treatment of breast cancer above and beyond what's currently on market today.
Can you break that down a little bit more for us? How will it improve the treatment?
Yeah, so this is really, we call it a CDK4, and like Ibrance is our current therapy, which is CDK4/6. A really great therapy, but what happens is there's some side effects with the CDK6 component of it. With the CDK4 franchise alone, this will allow us to treat breast cancer, but have a condition where it's the side effects are very mild, so people can stay on therapy longer. So it's going to be, hopefully, if successful, a very big unlock for patients with breast cancer.
And what other ways is Pfizer investing in oncology?
Well, we obviously have a big platform with we call coming out of the Seagen portfolio with ADCs, but we've also have legacy monotherapies that we're treating both bladder cancer, prostate cancer, blood cancer, and breast cancer. Those 4 franchises really where we're leaning into at this point in time.
And as the CFO of Pfizer, how do you balance innovation with financial discipline?
Yeah, well, it's a good question. I think what we're trying to do is we invest about $10 to $11 billion annually within our internal research and development platform. We've kind of ring-fenced that as we think that's like approximately the right amount of investment on an annual basis, and then we supplement that with business development that we add to our pipeline as we think about areas of patient needs and needs for our business. And so we're trying to ring fence those dollars, and then with that as a mantra and that as an envelope of investment, then progress our earnings after that.
And what key areas are you focusing on for growth for Pfizer in 2026?
Yeah, 2026 is actually probably going to be a little bit of a down year for us. We have, over the next 3 or 4 years, we have about $17 billion of products that are losing patent protection. So what we've done, we've actually invested in our internal R&D and within business development to look for growth by the end of the decade. So our focus is really driving growth in 29 and 30 from an enterprise perspective. And we've done that again through looking at oncology. We've done that through our primary care franchise with obesity. We've also looked for a continued development of vaccines, and finally in I&I.
We have just a few seconds left, but what is next in the oncology space for Pfizer?
Well, what is next is this year is a huge readout year for us. We have many products this year, both in oncology and in other franchises, that are going to read out. That will actually allow us to very specifically outline the path forward to develop these important medicines.
All right, Pfizer CFO Dave Denton, thank you so much for joining us at the New York Stock Exchange.
My pleasure. Thank you so much.
Still to come, a new list unveiled earlier today highlights the companies doing the best at building talent, and many NYSE-listed firms are on the list. One of the people behind the research breaks down what is setting some major firms apart. And meanwhile, last month's Vast Forward event brought together leaders to collaborate on what's next for AI. And one of Vast Data's executives told me how it's working with businesses and clients who are looking to embrace the technology. And later, I'm going to head down to the trading floor where Banco Macro CEO Juan Parma will tell me why the company's 20-year listing anniversary is so significant. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Earlier this morning, the first ever Where You Work Matters list was unveiled. The list, which included nearly 200 NYSE-listed companies, in its gold and platinum tiers, rates how well major U.S. employers are building, rewarding, and retaining talent. The Schultz Family Foundation was among the organizations behind the report. And joining me now is Rajiv Chandrasekaran, Managing Director of the Schultz Family Foundation. Rajiv, welcome to the New York Stock Exchange.
Great to be here with you, Ashley.
All right, so what is this list? What was the goal of this list?
So this is unlike any other great place to work, great job list in America. What we do that's so unique is we vacuum up millions upon millions of data points about workers. We look at what's really happened to them over the last several years. Not what companies say they're doing, but how their workers really fared. And we rate the top companies overall. We look at about 1,700 companies. And the great news here is that top tier of companies, those are that we award platinum distinctions to, about a third of all the platinum companies are listed here on the NYSE.
Tell me about some of those companies. What makes them so great in developing this talent?
Well, what it shows is that these are companies that are performing really well at various stages of a worker's career, and in some cases, all of them. We look at early career opportunities, how these companies are bringing in younger workers into the workforce and giving them that first step up. We look at how well they're growing people's careers for that phase of one's professional life where you really want to build skills and move into management. And then we look at how well they're doing at paying and retaining their workforce, really building that loyalty and stability companies need. And what we see from many of these platinum awardees is that they've cracked the code across a number of different occupations, doing that at all phases of a worker's career. And the really crucial thing is for workers, where they work really does matter. The difference in what average pay is for a worker in an occupation that we assess as platinum compared to one that isn't can be as much as 50% more.
You say you've gathered millions of data points. How did you gather these data points?
So we work with our partners at the Burning Glass Institute and at Harvard Business School to do this in a completely revolutionary way. We look at how workers represent their career progression on social media sites like LinkedIn. We vacuum up millions of resumes people post online, lots of different places, but like Indeed is one of them. We've ingested with permission the entire Glassdoor salary database, and we've pulled together this massive view. In fact, our ratings are based on assessing 12 million workers over 5 years, and what's really happened to them, how they've been promoted, how they're paid. And we can even see if a worker moves from one company to the other, because we follow the workers, we can see whether when they move, they're moving into a better job.
And 199 NYSE listed companies were in your gold and platinum tiers, including Boeing, GM, Procter & Gamble. What makes the tiers differ? What makes the tiers different?
So platinum's the top, gold is the next. But both are great. Both are clearly represent real success. But I want to flag those three companies you mentioned: Boeing, Procter & Gamble, General Motors. They are 3 of 22 companies that we found to be the highest performing across not just receiving platinum awards, but in the early career growth and stability categories we have, they're also platinum across all of those. They are in a special tier of companies. And so these NYSE companies have really cracked the code on creating great jobs, from those who are just entering the workforce to those who might have 20 or 30 years of experience in the workforce.
Do any sectors stand out in particular to you?
You know what's interesting about that? No. Their sector is not destiny here. It's unlike a lot of other lists where they could be dominated by big banks and tech companies. We see companies from across the American economy, sort of representing the breadth of companies that you guys list, all performing well. It also means that there's some companies in sectors, while they do well, they have competitors who aren't doing as well. And to us, an inescapable conclusion of this is that to do well, it's not based on necessarily your business model or your sector. It's based on leadership decisions by the company. Do you value your people? Do you see that the talent needs you might have here on your org chart could be filled from people over here with the right skills, training, and pathways? Or are you just treating people as expendable?
Why did you decide to create this list?
We saw a void in the marketplace. Nobody was really looking at how workers were doing as a measure of the practices that companies have when it comes to managing their human talent. Plenty of people kind of look at what companies say. They ask companies to fill out surveys. They do small focus groups. But nobody was really looking at this in an empirical way when it comes to what was actually happening on the ground to millions of workers across our economy. So we decided to take a fundamentally different approach, and it's a big data project, and all of this data now exists on whereyouworkmatters.org, and people can go and look at every single company. And we have a cool feature that allows you to go and pick an occupation at a company and then compare it to the same occupation at a different company. So if you're a GM and you click on automotive engineers, you can compare that very same job to how automotive engineers might do at Ford or Tesla or any other company.
All right, Rajiv Chandrasekaran, Managing Director of the Schultz Family Foundation, thank you so much for joining us at the New York Stock Exchange.
Pleasure to be with you, Ashley.
Last month, Fast Forward 2026 conference in Salt Lake City brought together leaders to collaborate on shaping the future of artificial intelligence. I was on the ground and spoke with several of these leaders, including Vast Data VP of Business Development and Alliance, John Mao, who told me what businesses are looking for when it comes to implementing AI. Take a look.
A lot of them are looking for a variety of things. Some of our largest AI companies, customers are looking for just better, simpler infrastructure, data infrastructure to support things like model training, to support some of their large inferencing projects and so forth. And similarly, in the enterprise market, many of them are now starting to leverage AI, figuring out how to embed AI into their business, into their operations, right? Not only to improve some efficiencies in terms of how they run their operation, but also to create new and extract new insights and values as output, right? We talk a lot about AI producing intelligence, creating new intelligence to provide more value to perhaps their customers as well.
What is Cosmos?
Cosmos is something we launched 2 Octobers ago. It started off as a way for us to build a developer community. As an operating system, we have 2 main jobs. One, which is to provide an abstraction layer for hardware, but also to provide a place in which applications can run, especially AI applications these days. And that new breed of AI applications, there's a whole bunch of new tools, frameworks, solutions, platforms. And so we launched this Cosmos as a community first and foremost for developers, the builders out there in our ecosystem. This week, we actually announced that we're extending Cosmos. It's gotten great reception, and Cosmos is now extended to broaden that ecosystem. It includes now a network of channel partners, distribution partners, our OEM partners, system integrator partners, technology partners, and on and on and on. There's a whole bunch, and we believe strongly that there needs to be a vibrant ecosystem that exists. It's good not only for Vast, but also for our mutual customers as well.
All right, and I know you announced the 12 Labs collaboration here at Fast Forward 2026. Can you tell me more about that?
Yeah, 12 Labs is, they're a fascinating company. They are one of very few what we call foundational model companies. In other words, they built their own AI technology from scratch. And they specialize in something called computer vision. Computer vision is fascinating to me personally because for the first time in history, we have technology in the form of AI that can watch video like a human would and be able to understand it and explain exactly what's happening scene by scene, but in non-linear time, right? Where you and I would watch video and we could understand it, we'd have to watch it in a linear time. AI can now look at this and kind of watch it in fast forward, right? Like 1,000 times fast forward and still understand everything that it saw, connect everything that it saw in its memory, and be able to recall information about anything instantly as well. So they're a partner. They've done very well in certain markets, like in media and entertainment in their early days. They've now looked at some markets that we also happen to participate in, whether it's in smart cities, in manufacturing, and retail, and so forth. And so the partnership's about enabling the Vast AOS as a platform for which they can bring their AI technologies to run on our systems. And together, we can go solve some of these computer vision problems with their AI technologies for some of the largest data organizations in the world. What do you think it says about where enterprise AI is heading? I think enterprises are still early on in their journey because these are big investments that enterprises are now having to make. It's not like a small investment. These are very large investments. And so obviously, there's a lot of caution in terms of how they approach because there has to be a justified ROI. What we're seeing is that it's starting to build a lot more clarity over the last 12 months. Enterprises are starting to understand where the best ROI use cases are to start with. And we're starting to see the adoption increase. I was speaking with someone just the other day. If you go back 12 months ago, I don't think I I heard or witnessed any enterprises investing in just a massive amount of infrastructure. I'm talking hundreds of millions of dollars on AI infrastructure. But if you just go back a couple of months, you're starting to see that take place. And so I think a lot of things are starting to come together, both from a business value perspective, but also from a technology perspective. It's becoming easier for enterprises to adopt and integrate into their environments. And VASS is playing a big part in that role as well.
Why do you think we're seeing bigger spend? Because I understand, as you're saying, people were spending individually on AI projects, and now they're creating infrastructure around it, and there's more of a big spend. Why do you think we're going there?
Well, I think AI infrastructure is by definition pretty expensive in itself, right? And as you move into production, there's always a scaling element. So you might invest in a small sandbox, a pilot. That's always usually fairly small and contained, just to make sure you can validate some of your ideas, right? But when you start to think about a large enterprise and deploying this to support their workers, to support their manufacturing, to support different facets of their business, there's an element of scale that is significant. So I think that's a good positive indication that people don't just go write $100 million checks if they haven't really got a clear line of sight to how this is going to affect their business. And I think we're starting to see that. So I think that's a lot of it. I also think that there's just, I think a lot of the technology has become more apparent for these enterprises. So I mentioned like the 12 Labs example. A lot of these organizations have been capturing video for a variety of different uses, but it's usually just sat there. It's been very trapped in kind of an untapped pool of data that's been there. And now I think they're starting to understand that, wow, if I can leverage that kind of asset, I can extract a whole bunch of information. Like an example I give often is I spoke with a retailer who has a lot of video footage, obviously, of every store, right? And normally you would think about video in that scenario to be for like, loss prevention, shoplifting, et cetera. But now imagine being able to use that same video, that same footage, and do analytics against it, understanding how many people went down each aisle, at what time of day, how long did they stand at the end cap of that aisle to look at the advertisement that was there, right? That's invaluable insight in a data, in an asset that was always there, but inaccessible, right? Not able to extract that type of kind of insight until now. So I think those are the two things that I think are starting to see. People are starting to accelerate a wide range of use cases, and then there's new use cases that are starting to drive that demand even further.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Earlier this hour, NYSE listed Banco Macro rang the opening bell to celebrate its 20th listing anniversary. Joining me now is Juan Parma. He is Banco Macro's CEO. Juan, welcome to the New York Stock Exchange.
Thank you, Ashley. Thank you very much.
What was it like for you to be up at that bell podium?
Well, you know, I've been working in this industry for over 30 years, so being there and having the opportunity to enjoy that thrilling moment with a bunch of, I think it was 12 of us up there ringing the bell. It was an amazing and very noisy and very emotional moment for us.
And what does it mean to celebrate 20 years of listing on the New York Stock Exchange?
It's very important for us. It's a huge milestone, but not that much because of the 20 years by itself. It's what happened through those 20 years. When we listed the bank 20 years ago, we had 5% market share. We have 9% market share today. We had $1.5 billion of market cap. We have almost $5 billion of market cap today. And through this period, the bank grew significantly, both organically and inorganically, more than 5 acquisitions through this period. So the access to capital 20 years ago was used wisely by the bank in terms of growing and developing and succeeding through these years.
And as one of the largest private banks in Argentina, how do your solutions specifically align with what customers are seeking?
Sure. We are a universal bank. We service more than 6.5 million people in Argentina. We have the largest branch network, the largest ATM network. So we are a bank for everyone, from small companies to big companies, from all the range of social classes in the Argentinian society. So we are a significant part of the Argentinian financial system, and we continue growing. So very happy to be in that position and being here today.
And in our last 30 seconds, what are some of the biggest initiatives for the bank in 2026?
Well, as I said, through the last 20 years, the bank grew organically and inorganically. That continues being the case. We've just announced our 2030 strategy, which is an ambitious one. We've just announced 2 acquisitions, the acquisition of a wallet, personal pay, and the acquisition of a bank last week. So we continue growing and betting big on Argentina. The purpose of the bank is being the leading bank for a big Argentina, and we believe we're acting accordingly. So if you are an Argentinian, if you are one of our clients, if you're one of our investors, if you think big, think macro. Si piensas grande, piensa en macro.
Thank you so much, Juan Parma, CEO of Banco Macro. Thank you for joining us. That's going to do it for today. We'll see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is the cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?